Hey everyone, welcome back to BullionIQ, your go-to channel where we break down the world of finance, cryptocurrency, and everything in between. I'm thrilled to have you here today because we're diving into something really big happening in the crypto world right now, XRP ETFs and the potential supply shock that's quietly reshaping the market. If you've been following crypto for a while, you know that XRP has always been one of those coins that grabs attention, but what's happening now is on a whole new level. Before we jump into the details, I want to thank each and every one of you for supporting this channel. Every comment and subscription goes a long way. It not only motivates me to keep bringing you high-quality content, but it also helps more people discover BullionIQ. And if you're looking for a reliable place to buy XRP, make sure to check out my favorite exchange, Uphold, linked in the description below. Now let's get straight into the topic. The XRP ETFs are absorbing XRP at a rate that's absolutely mind-blowing. When these ETFs first started launching, most people thought this won't really impact the total XRP supply, but reality is proving otherwise. We're already seeing hundreds of millions of XRP being taken off the open market and moved into the hands of long-term holders. To give you some perspective, just 5 ETFs have launched so far, and there are a total of 18 planned, and that's only counting the ones officially filed. Despite being such a small fraction of what's coming, these ETFs have already absorbed around 666 million XRP, and the number is creeping close to 800 million. That means roughly 1% of the total XRP supply has already been taken off the market in just the first week or two. This is significant because it creates a real supply constraint. With less XRP available for purchase on exchanges, the dynamics of price start to change. Essentially, XRP's price acts as a self-leveling mechanism. As demand grows and supply tightens, prices rise. When prices rise, more holders might consider selling some of their XRP, which in turn increases available supply, but at higher price points. In other words, you might still be able to buy XRP in the future, but it's unlikely to be at the same prices we're seeing today. This is one of the key reasons why these ETFs are such a powerful catalyst. They are not only attracting new investors, but also shifting the supply-demand balance in a way that's structurally bullish for XRP. Another interesting aspect is the reaction, or lack of understanding, from some parts of the crypto community. For example, Bitcoin maximalists have been quick to label these developments as bearish, calling XRP a Ponzi, or claiming that the market is running out of legs. This is ironic because taking XRP off exchanges and into cold storage is the opposite of bearish. It's a sign of long-term confidence. People moving XRP into secure storage is exactly what you want to see when institutional investors start adopting a cryptocurrency. It highlights a difference in perspective between those who are purely ideologically attached to Bitcoin and those who are evaluating XRP based on its utility, adoption, and market fundamentals. Speaking of adoption, this is where things get even more interesting. The new wave of investors entering the crypto market through these ETFs is not the same as the early adopters or speculators. These are sophisticated investors, often managing large amounts of capital, who are looking for assets with real-world utility and measurable demand. XRP fits this profile perfectly because it has a clear use case in cross-border payments and liquidity settlement, which makes it appealing to institutional players. Unlike the early days of crypto, where hype and speculation dominated, these investors evaluate assets based on models they've used for decades in traditional markets. Their focus is on long-term value and structural opportunities, which is exactly why XRP is starting to attract so much attention. From a market perspective, this is also reflected in XRP's performance against Bitcoin. Since the launch of these ETFs, XRP has been trending upward against Bitcoin, meaning it's either losing less value or gaining faster than Bitcoin itself. Historically, when XRP decouples from Bitcoin in this way, it often signals a period of strong momentum and potential breakout. If we combine this with the structural supply constraints created by ETFs, it sets up a scenario where XRP could see significant upward movement, both in terms of price against fiat currencies and relative to other cryptocurrencies. Finally, what makes this moment particularly exciting is that we are witnessing a shift in how the broader financial world views cryptocurrency. ETFs are opening the door for mainstream investors who may have previously avoided crypto due to complexity or regulatory uncertainty. XRP's design and existing partnerships position it uniquely to benefit from this influx of capital. As more ETFs launch and more investors gain exposure, the snowball effect could be massive. XRP isn't just a crypto asset anymore. It's becoming a key player in the evolving landscape of digital finance. We're going to break down exactly what this means for XRP's supply, price, and the overall market dynamics. This is where things get really interesting because the numbers are starting to tell a story that most people aren't fully paying attention to yet. Let's start with the ETFs themselves. So far, we have 5 active XRP ETFs, but there are 18 in total that have been filed and approved in various stages. Even with only a few ETFs live, they have already absorbed approximately 6,666 million XRP, and that number is rapidly approaching 800 million. To put this into perspective, that's about 1% of the total XRP supply, already locked away in long-term holdings. Over the next 4 to 5 months, analysts expect these ETFs to take off between 10 and 15 billion XRP from the market. That's a massive shift in supply, especially when you consider that the total circulating supply is finite and already partially held by early adopters and institutions. Why does this matter? Well, in simple terms, the more XRP is locked up in ETFs, the less is available for everyday traders and investors to purchase on exchanges. This directly impacts the price. XRP's price works like a self-leveling mechanism. When supply decreases and demand stays the same or increases, the price goes up. Conversely, when the price goes up, it can encourage holders to sell a portion, which temporarily increases available supply. But with ETFs absorbing so much XRP at such a fast pace, the usual balance between supply and demand is being disrupted. This is the core of the supply shock we're talking about. Another important aspect is how this supply shock compares to historical trends. Typically, cryptocurrency markets have been dominated by speculative traders who focus on short-term gains. These traders often panic sell or move in and out of positions based on hype. But what we're seeing with XRP ETFs is different. The coins being bought by ETFs are going straight into long-term storage, often referred to as cold storage. This means they're not circulating on exchanges and they're not available for short-term trading. This creates a structural scarcity that didn't exist in previous cycles. Essentially, the market is being forced to adapt to a smaller effective supply, which could push prices higher even without new investors entering the market. Now, you might be wondering, does this mean I won't be able to buy XRP in the future? The answer is nuanced. You will still be able to buy XRP, but it's unlikely you'll be able to buy it at today's prices. As demand continues to grow, especially from institutional ETFs, the price of XRP is likely to rise. This is the natural outcome of supply and demand economics. Those who hold XRP long-term benefit from this because their assets are appreciating, while new buyers might have to pay more to acquire the same coins. It's also worth noting how this supply shift affects market psychology. We're seeing a wave of new investors entering the market through these ETFs, investors who are sophisticated, looking for assets with real utility, and often managing large sums of money. Unlike early crypto adopters who bought based on ideology or hype, these investors are making calculated decisions. They recognize XRP's real-world use case in cross-border payments, liquidity provision, and institutional adoption. Their buying power, combined with the ETF structure, is creating a snowball effect that can significantly influence the price trajectory over the coming months. Another critical point is how exchanges are reacting. Data from analytics firms show that XRP on exchanges is hitting record lows. The circulating supply on exchanges, the XRP that can be bought and sold immediately, is shrinking rapidly. This is the direct result of ETFs absorbing XRP and long-term holders moving coins into cold storage. The fewer coins available on exchanges, the greater the scarcity and the more likely prices are to rise. In a sense, the ETFs are acting as a vacuum, removing supply from the system and locking it away for months or years. Interestingly, this shift is also highlighting a difference in perspective within the crypto community. Bitcoin maximalists have tried to frame this as a negative development, suggesting that XRP's growing demand is somehow unsustainable or Ponzi-like. But in reality, these ETFs are increasing confidence in XRP's utility and long-term value. People taking XRP off exchanges and into cold storage is bullish, not bearish. It shows that institutional players see value in the asset and are willing to lock it away, which is a strong signal for the market. Looking ahead, we can expect continued pressure on XRP's supply. As more ETFs launch and attract investors, the amount of XRP available for trading will continue to shrink. This will likely lead to higher prices and more attention from mainstream investors. Those who have been holding XRP for the long term could see substantial gains as the supply-demand imbalance intensifies. At the same time, traders and speculators will need to adjust to a market where available supply is limited and ETFs dominate buying activity. Finally, it's worth discussing the broader implications. XRP's ETF-driven supply shock isn't just about price. It's about legitimacy and adoption. ETFs are regulated, institutional-friendly investment vehicles. Their involvement signals that XRP is being recognized as a credible asset by traditional financial players. This could pave the way for more institutional adoption, partnerships, and even integration into financial systems that were previously hesitant to engage with cryptocurrency. Let's start with the XRP price charts. After the launch of the first XRP ETFs, we've noticed an interesting trend. XRP is holding above key support levels. Even during minor corrections, the price has been resilient. This shows strong underlying demand and signals that investors, especially ETFs, are absorbing a large part of the supply. What this means is that the traditional support and resistance levels are behaving differently now. Previously, XRP would bounce or crash within familiar ranges, but ETF involvement is creating a new dynamic where price can move sharply if a large tranche of XRP is locked into ETFs. One of the most significant observations is XRP's momentum against Bitcoin. Historically, XRP has tended to follow Bitcoin's general trend. If Bitcoin rises, XRP rises. If Bitcoin falls, XRP falls. But since these ETFs began absorbing large amounts of XRP, we've seen a decoupling effect. XRP has started outperforming Bitcoin, meaning that even when Bitcoin is stagnating or slightly down, XRP maintains upward momentum or falls less sharply. This is important for traders and investors because it indicates that XRP's value is now being driven more by its own fundamentals, utility, adoption, and ETF demand, rather than being entirely dependent on Bitcoin's movements. Now, let's break down why this decoupling is happening. ETFs create long-term consistent buying pressure. Unlike retail traders who react to short-term news, ETF managers are strategically accumulating XRP to meet investor demand. This steady, predictable demand acts as a buffer against volatility. When Bitcoin experiences corrections or sideways trading, XRP's ETF-driven accumulation helps it hold value or even trend upward. In simple terms, ETFs are giving XRP its own independent market momentum. Looking at trading patterns on exchanges, we're noticing another critical factor. The available supply on exchanges is shrinking. As XRP moves into ETFs and cold storage, the circulating supply for trading is decreasing. This scarcity effect is similar to classic economic theory. When supply drops and demand stays the same or rises, prices naturally go up. The smaller supply also means that even moderate buying pressure can push prices higher, leading to sharper price movements. Traders should take note of this because traditional volume and liquidity metrics may not fully reflect the real supply constraints created by ETFs. Next, let's discuss some specific price zones. Currently, XRP is trading above a major support zone, which acts as a safety net. If the price holds here, it's a positive sign for building upward momentum. Technical indicators such as moving averages and RSI suggest that XRP is in a consolidating phase but leaning bullish. Once consolidation ends, the potential for a breakout increases significantly. The combination of ETF absorption and reduced circulating supply makes a breakout scenario more likely than in past cycles. Now let's talk about what this could mean for future price movements. Suppose ETFs continue absorbing XRP at the current pace, we could see an acceleration in the price trend as scarcity meets growing demand. Even if Bitcoin remains relatively flat or declines, XRP could outperform because ETFs provide a structural demand that Bitcoin lacks. This is a key point. XRP is gaining structural support in the market that doesn't rely on short-term hype or retail speculation. Another interesting chart observation is XRP's performance relative to other cryptocurrencies. Compared to altcoins without ETF backing, XRP is showing superior resilience. Altcoins often mirror Bitcoin's movements and can be highly volatile, but XRP is increasingly showing independent strength. This means that institutional ETFs are not only creating scarcity, but also positioning XRP as a more stable, reliable asset for investors who want exposure to crypto without extreme volatility. It's also worth noting the psychological impact on traders. When retail traders see XRP outperforming Bitcoin and other altcoins, it can attract new interest. People want to be part of the trend, and as more attention flows into XRP ETFs may need to acquire even more coins to meet investor demand. This feedback loop, where scarcity drives price, attracting attention, which drives more demand, can accelerate the price action further. In addition, ETF involvement changes how XRP is perceived in the broader financial market. Institutional players see ETFs as a regulated and secure way to invest. This perception can increase trust and credibility in XRP, attracting more long-term capital. As ETFs grow and additional products launch, this could create a network effect, where the increasing legitimacy of XRP encourages further adoption by banks, payment providers, and large-scale investors. Let's not forget one more factor: XRP's decoupling events historically. XRP has experienced several periods where it moved independently from Bitcoin, often due to news, adoption milestones, or significant accumulation. ETFs are creating another layer of independent demand, potentially leading to a new decoupling period. If this occurs while supply remains constrained, we could see a period of strong upward momentum, similar to or even surpassing previous breakout phases, institutional adoption. XRP ETFs are essentially bringing in a new class of investors, sophisticated, professional, and long-term focused. Unlike retail traders who react emotionally to price swings, these institutional investors are more concerned with fundamentals, liquidity, and risk management. They want assets that have utility, proven adoption, and regulatory clarity. XRP ticks all these boxes. With multiple ETFs already in play and many more coming, the accumulation of XRP by institutions will continue to reduce circulating supply, which directly impacts price dynamics. Now let's discuss price projections. Given the current ETF absorption rate, XRP could see between 10 to 15 billion XRP locked into long-term holdings over the next few months. This is huge. To put it into perspective, a shrinking supply with stable or rising demand almost always leads to higher prices. If we assume even moderate continued demand, XRP could reach price levels that were previously considered unrealistic. While it's impossible to predict exact numbers, it's reasonable to consider a scenario where XRP could see a 50% to 100% price increase within the next 6 to 12 months, driven solely by ETF demand and market scarcity. Another key factor to consider is market psychology. As XRP continues to outperform Bitcoin and other altcoins, the narrative is changing. People are starting to view XRP not just as a cryptocurrency, but as a serious financial asset with real-world utility. This shift in perception is important because it draws in a different type of investor, those who are not just speculating on crypto trends, but are looking for assets that provide liquidity, settlement efficiency, and regulatory compliance. In other words, XRP is beginning to attract the same type of capital that has traditionally driven stock and bond markets. Let's talk about different market scenarios. In the first scenario, ETFs continue to absorb XRP at the current pace, and retail and institutional interest grows steadily. This scenario could lead to a sustained bullish trend where price gradually climbs while supply continues to tighten. In the second scenario, we could see a parabolic spike where ETF demand coincides with a breakout against Bitcoin, causing XRP to surge rapidly in a short period. This could trigger more retail and institutional attention, creating a feedback loop of buying pressure. It's also important to note that price corrections are natural. Even in a bullish ETF-driven market, XRP could experience temporary pullbacks. These corrections are healthy and often provide opportunities for new investors to enter the market. However, because the structural demand from ETFs remains, any dips are likely to be short-lived. The scarcity created by ETF accumulation acts as a natural support for price during corrections. Now let's discuss institutional influence on trading behavior. With ETFs and professional investors, XRP is no longer just a retail-driven market. Institutions bring strategic trading, portfolio balancing, and risk management strategies that stabilize the market. This means that XRP may experience less volatility compared to other altcoins without ETF support. Price swings may become more predictable, and liquidity may increase as larger market participants manage their positions across multiple exchanges and ETFs. Another factor that could influence future price action is regulatory clarity. XRP has already benefited from significant legal clarity in comparison to many other cryptocurrencies. The SEC ruling confirmed that XRP sold on public exchanges is not classified as a security, which opens the door for ETFs and institutional adoption. This regulatory certainty is a massive advantage because it reduces the risk for large investors and encourages the creation of new financial products using XRP. Looking further ahead, XRP's utility in cross-border payments and settlement could also drive value. While ETFs are the immediate catalyst for scarcity, XRP's fundamental use case in real-world financial systems adds a secondary layer of long-term support. Banks, payment processors, and financial institutions could increasingly use XRP for fast, low-cost settlement, which further strengthens its market position. This dual support, speculative demand from ETFs and fundamental demand from financial infrastructure, creates a unique growth environment that few other cryptocurrencies enjoy. One interesting scenario is the interaction between ETFs and retail traders. As ETF-driven scarcity pushes prices higher, retail investors may perceive XRP as a must-have asset. This can create additional buying pressure, accelerating price growth. Importantly, retail investors are learning from institutional moves, and the growing narrative of XRP's utility and ETF adoption reinforces confidence in the market. Essentially, institutional adoption is teaching the retail market that XRP is not just another speculative token. It has tangible value. Finally, let's consider XRP's potential to redefine market dynamics. Currently, Bitcoin dominates the crypto narrative, but XRP's ETF-driven growth could challenge that dominance. If XRP continues to outperform Bitcoin, attract institutional capital, and gain wider adoption in real-world financial systems, it's possible we could see a reshuffling of crypto market hierarchy. XRP could emerge as a primary settlement and investment asset, reshaping how the crypto ecosystem operates in the years to come. The rise of XRP spot ETFs is not just a short-term phenomenon. What we're seeing is a structural shift in the crypto market. These ETFs are steadily removing XRP from circulation, meaning that over time, a significant portion of XRP will be held by long-term investors and institutions. This creates scarcity, and scarcity tends to drive price growth. Unlike other cryptocurrencies that rely mostly on hype or speculation, XRP now has both institutional backing and real-world utility, which gives it a stronger foundation for long-term growth. Another major implication is that XRP could become a key settlement asset in the financial system. With projects like Project Ion, R3 partnerships, and XRP's connections to cross-border payments, XRP has the potential to be widely used for settling transactions between banks and institutions. If this happens, XRP won't just be an investment asset, it will be an essential part of global financial infrastructure. That adds a layer of fundamental demand that few other cryptocurrencies can claim. Now let's talk about strategic entry points for investors. Even though ETFs are absorbing XRP rapidly, there will still be opportunities to buy at reasonable levels. One key approach is to watch XRP's price relative to Bitcoin. As we've discussed, XRP is starting to decouple from Bitcoin, meaning it can move independently. When XRP pulls back slightly while maintaining strong support levels, these can be excellent buying opportunities. Similarly, if XRP breaks out of consolidation and shows strong upward momentum, that could signal a trend continuation, giving early investors a chance to enter before broader retail interest floods in. Another strategy is to consider timing based on ETF activity. ETF launches tend to create bursts of buying pressure. Observing ETF inflows, public filings, and announcements can give you clues about when demand might spike. Buying ahead of these events can give you an advantage. Of course, it's important to combine this with technical analysis, looking at key support and resistance levels, moving averages, and trend indicators to confirm entry points. We also need to discuss risk management because even though XRP is showing strong potential, no investment is without risk. Price corrections, regulatory changes, and market sentiment shifts can impact XRP's short-term price. A good approach is to divide your investment into smaller positions, gradually accumulating XRP over time rather than investing a large sum all at once. This reduces exposure to sudden market swings. Another risk management strategy is to set realistic targets and stop losses. If you're investing for the medium or long term, it's important to know your price targets and have an exit plan in case the market moves against you. While XRP's fundamentals are strong, temporary pullbacks are normal, and planning ahead helps you avoid emotional decision-making. We also need to consider diversification. While XRP is promising, putting all your funds into a single asset is risky. You could consider holding a portion of your portfolio in XRP while keeping the rest in other cryptocurrencies, stablecoins, or traditional assets. This balances potential gains with protection against unexpected events. Diversification is a core principle of professional investing and will help you manage risk in a volatile market like crypto. Next, let's talk about long-term adoption trends. Institutional adoption isn't just about ETFs. It's also about how XRP is used in financial networks. Banks, payment providers, and other institutions could start using XRP more actively for cross-border settlements and liquidity management. Each new use case or partnership can increase demand and scarcity, which in turn supports price growth. Over time, XRP could transition from a speculative asset to a mainstream financial tool, much like gold or fiat-backed reserves in the traditional system. We also need to keep an eye on regulatory developments. XRP has an advantage because it's already cleared some legal hurdles, but future regulations could impact how ETFs and institutions operate with XRP. Being aware of these changes allows you to adjust your strategy and stay ahead of potential risks. For example, any additional SEC guidance or international regulations could create short-term volatility, but may also legitimize XRP further for global institutional adoption. Finally, let's discuss the potential upside of XRP in a broader market context. If XRP continues to absorb supply via ETFs, gains traction with institutions, and strengthens its role in settlements, we could see XRP challenging Bitcoin's dominance in the market. This doesn't mean XRP will immediately replace Bitcoin, but it could become a major contender as both an investment and a financial utility asset. In such a scenario, early strategic investors could benefit significantly, especially if they combine knowledge of supply trends, ETF activity, and price movements. XRP is entering a critical phase of structural growth. ETF-driven scarcity, institutional adoption, regulatory clarity, and fundamental utility are converging to create a strong foundation for long-term growth. Strategic entry points, disciplined risk management, and understanding market cycles are essential for navigating this opportunity. XRP is not just a short-term speculation anymore, it's becoming a serious financial asset with long-term potential. As always, thank you for spending this time with me here on BullionIQ. If you found this analysis valuable, make sure to like, comment, and subscribe to the channel. Your support allows me to keep bringing detailed professional insights on crypto and finance straight to you. Stay tuned, stay informed, and always make decisions based on both fundamentals and market intelligence. XRP's journey is just beginning, and we're here to watch it unfold together.